Singapore's economy contracted a less than expected 1% according to Q2 data released today, as the Monetary Authority of Singapore today also announced that it was maintaining its current stance of a modest and gradual appreciation in the Singapore dollar. On the phone with me now to delve a little deeper into Singapore's economy is Nomura's Enrico Tanuwidjaja. Enrico, in your view, is today's GDP figure simply a blip in what has been a relatively steadfast performance thus far in 2013?
If you look at the data in itself, there has been an upward revision in the Q2 number, which is very strong. It's a double digit. So I think this less than expected 1% sequential contraction means actually, which is lower than expected, is giving indication that they do not shrink sequentially as high. Because if you look at the year-on-year number, it beats our expectation at 5.1%. So I don't think it's a blip. It's actually a much stronger number for Singapore.
The central bank recently implemented housing rules to ensure monthly mortgage payments do not exceed 60% of the buyer's combined incomes. While this has indirectly led to buying interest in homes to decrease, has this freed up household budgets in other areas, such as today's retail sales data, for example?
Well, I think the reason why they put macroprudential measures in the housing sector is to basically preempt the impact from rising interest rates in a very near term going forward. So I think this has undoubtedly led to a smaller buying interest in the housing sector, in homes, as you've correctly pointed out. But whether this freed up household budgets in general, not necessarily, because as you can see, the tight labor market in Singapore would mean that inflationary pressures would be higher because of higher so-called nominal wage, and thus pushing the domestic demand into higher. Well, the retail sales data actually fell in more than expected because of the fall in the auto prices.
Enrico, you've commented that inflation remains a slightly higher priority for the MAS as they seek to tackle inflation risks from other parts of Asia. In your view, how effective is the central bank's use of the Singapore dollar as a management tool?
It is very effective to actually control, or rather keep the imported prices at bay. So whereas all the other Southeast Asian markets or Asia in general uses interest rates, Singapore chooses exchange rate because of its high trade to GDP ratio. Thus, we believe that under such circumstance, the effectiveness of Singapore dollar to keep imported prices at bay remains highly relevant and very effective.
The repositioning of services over exports within Singapore's export-dependent economy is also an item with currency movement potential. With growth expected to remain volatile, what are your forecasts for the Singapore dollar?
Our FX strategy team is actually looking for 1.23 by the end of 2013 and 1.22 by the end of next year, which is 2014. Yes, they have been some shift in terms of the growth driver, and as services, becomes increasingly important, I think, for a very open economy like Singapore, the role of currency movement is going to be very pivotal, and thus, I think MAS will continue to use this kind of exchange rate policy to ensure that the economy will remain on a steady balance.
Enrico, many thanks. Coming up today on Dukascopy TV, we've got the Week Ahead interview, an exclusive look at the latest currency market movements in our Targets in Focus programme, and Thomas Taplin will be bringing you another press review, so don't go away.